Hello, lovelies. Welcome to this special video that I'm bringing up at this point in time. This is your boy, the E.M.A cash flow, and I'm here to talk about this exponential moving average crossover strategy. I'm here to bring you a practical illustration and to show you that it's not just about the talking, it's about the doing. This is a practical illustration of what I told you in the last video. If you've not watched my last video, make sure you go and check that video and watch the video. I explain how you can trade the exponential moving average crossovers, E.M.A 50 and 200 crossover. I explained detailedly in that video. You will love what you will learn in that video. So make sure you check that video and watch it. And now I'm in this video to bring you a clear demonstration of what we call trading. And in this video, I'll be showing you some tips. Currently, I am in the market. You can see there are two entries that I've taken. Look, the screen, you'll see there are two sell entries. I took one right up here where there is this consolidation, and I took the other one right down here. But both trades are in the market right now. And as you can see, let me go look at what is happening. One of the trades is giving me $27.97 and the other is $94.31. And all of these trades I entered with the smallest lot size. I entered these trades with the smallest lot size. Imagine, guys, that you enter a trade with the smallest lot size. Look at what is happening here. This is magical. This is magical. But what is the trick? What is the secret behind this? This is what I've come to reveal to you. So be attentive as I show you the secret. What is it that made me to enter this trade? And why am I still in this trade at this juncture? And what do you think can be happening at this juncture, where we are at this juncture? What is the possible move that this market can make? It has taken me a lot of technical analysis to arrive this conclusion, to take these entries. First and foremost, take note of this area where we have our crossover. You see, this is the point where we have the crossover, where I am marking right now. You see, this is the point where we had the 50 and 200 E.M.A crossover, exponential moving average. E.M.A stands for exponential moving average. So you see this point where I'm marking here. This is where the crossover actually took place. The 50 crossover or the 200 crossover, the 50 E.M.A. The 200 is this moving average on red with the red color, and the 50 is the moving average with the black color. So you see where that crossover took place. And I said, each time you see this crossover, get ready to analyze and take entries. But remember, it is not every time that this crossover takes place that you have to enter the market. You need other details, detailed information, detailed knowledge to understand the perfect points where to take your entries. And I'll be coming up with videos subsequently to show you why, or to explain how you can know when to take your entries when you see this crossover, because it's not every crossover that you jump into the market. For instance, if we go behind, you will notice that at a certain point, look like this point. Let me take this point. You see, at this juncture here, there was a crossover. Look at this point. You see, there was this crossover here. And if we were to follow this crossover, seeing that the 50 came and crossed over the 200. And if we were to follow the strategy that each time there's a crossover, you enter the market, we could have taken a buy entry at this point. We could have taken a buy entry at this point because there was a crossover there. But if we had taken the buy entry, imagine what could have happened. This market at this juncture could have moved from this point right up to this point. Then you see where it took a reversal and it moved down. And this could have been catastrophic for you. This could have been disastrous. It could have taken you out of the market and you could have incurred a lot of losses. So what is it then? There is a way out. You need to understand the right time to take this crossover. So there are things that we take into consideration. There are other analysis that we put in place whenever we see this crossover to be certain, to be sure before you enter the market. So here I want to talk about, in this video, I just want to talk about these entries, these two entries. You can see right in my screen, there are two sell entries that are entered. And like I already showed you, the entries are in profit. And this market, as you see, it has been running for days. I've been in this market for days. And in the last video, I actually made that video and I showed you this particular point where this crossover was taking place. This 50, 200 crossover was taking place. And so look at where this crossover took place. When you notice where this crossover took place, you realize that after this crossover, the market entered a consolidation. There was a consolidation. What do I mean by consolidation? Consolidation here simply means you see the market, when it crossed over, the market moved. It came down to this point. Then before it went up to that point. Then from that point, it went down to this point. You see, all of this movement wherein the market is moving up and down almost in the same zone is what we call consolidation. That is, the market is not actually having a proper direction. It is just moving up and down around the same zone. We call this consolidation. Some people say it's choppy. Whether choppy or consolidation, the market is not having an appropriate direction. So at this point where the market is consolidating, I was very vigilant to take my entry. So when the market moved from here up, where you see there is this uh, this in is navigating, where it is navigating right now. As it moved up, it formed this high here, then moved down, formed this low here, moved up again, formed this high. So you notice that it began by creating a structure, and immediately I noticed this structure. This is what I did. I had to draft out this zone. I had to draft out this zone. I draft this zone up. Then I also drafted this zone down. I drafted this zone down. So this is what happened. I drafted these zones. So as the market moved up and moved down, downward, moved up and moved down, as it moved up, it hit this zone. When it came down, it hit this zone, went up again, hit this zone, came down, hit this zone, went up, moved, hit this zone. I was very vigilant. Now, take note of something here. This is something I want to reveal here. As this market kept moving up and down, remember, this crossover had taken place. This 50, 200 crossover had taken place here, where you are seeing it's extravagating, where it's extravagating right now. That this 50, 200 crossover happened here. You notice that each time the market comes up, even if it moves above this 200, it will reverse back. The reason is because since this 200 is above the 50 E.M.A, it is an indication that this market is going to move in the downward direction. It's an indication, but that is not a confirmation. It's only an indication. You have to wait for the confirmation. So when I drafted this zone down, look at this zone down, this support zone down. When I drafted this support zone down, I was sensitive to be waiting to see when this market will actually break to give me a confirmation of sell. But that is not actually what I did to take this entry. What I did to take this entry was I waited for this formation here. There was a formation that happened here. You see this formation, what I'm drafting here right now. This point where you have this points here where it's extravagating. There's a formation that took place here, and this formation was a clear double top formation. And when that double top formation happened, I waited for this candle. Let me open. I waited for this candle. You see, at this juncture, let me show you so that I waited for this candle. This candle, this particular candle. This candle here, I waited for it. I'm talking of this candle. Let me use this mouse to show it, to point it. This candle, this is the candle I'm talking about. I waited for this candle to close below moving average 50. When it closed below moving average 50, and I saw this movement here in this area, I saw this movement in this area because this candle had closed below 50 after it came. I had to take this entry. Now, why did I take the entry? The first reason is because it came, like I explained in the last video, it came and closed below this moving average 50, this E.M.A 50. Now, that might not really be a sure way of looking or of analyzing and entering the market. What I considered was that when you look at this consolidation, you see that the market came, tested this support here the first time, went up, came down, tested it the second time. Then when it tested the second time, as it went up, and it was as it returned, as the market returned from this position, as this market returned from this position, as it was coming down, I was waiting to see this candle close, a candle close below moving average 50. And once I saw this candle, sorry guys, once I saw this candle, this particular candle, this long bullish candle that closed below this moving average 50, since this support here had been tested twice, I knew confidently that it's coming to break this support zone. And once this support zone is broken, the sell begins to go. So you see, it break the support zone. Actually, look here, it break the support zone here. Let me open again. It break this support zone here, and you see from this moment, this market, from where I took my entry, my sell entry around this point, this zone, you see it has been selling up to this juncture where we are right now. It has been selling, and as you can see, I am seeing the market with my two entries that I took. Look at the condition. I'm still in profit, massive profit. And so at this juncture, there is a possible direction that this market will be taking right now. And I can already predict the direction, even though predicting direction in Forex is not advisable. But with my analysis, I can tell you which direction this market will be moving to, following my analysis. So if you want to know detailedly where this market is going to and how you can take your entries and when you can quit your entries, because now I'm still in the market. I'm not going out of the market. I'm not quitting this market yet. I'm still in the market. So if you want to know more about this analysis, make sure you subscribe to this channel, hit the like button, drop a comment below, and don't forget to register for my mentorship program. My mentorship program is ongoing, and as a matter of fact, my students can explain detailedly why this market is at this juncture. They can tell you why they are still in the market right now. So me and my students, we are making massive profits daily. You can see the profits with the least loss size, with the smallest loss size. Imagine $115 with the smallest loss size. Risk management, pure risk management. And we've been in this market for days. So this is just an example of what I want to show you. If you are interested, if you want to be part of the mentorship program, make sure you leave me a message in the comment section, or you check the description and you get to me on WhatsApp, and we are going to talk, and I'm going to lead you into the mentorship academy, where you can begin to make some real dollars just trading synthetic indices. I hope this video taught you something and it inspired you. I look forward to seeing you in the next video. Before then, remain blessed. Shalom.